Good afternoon, everybody. This is Skip Sheehan, and we're here with Scott Nations from Nations Indexes, and welcome to this Ask Me Anything session. Today we're going to be taking your questions, and a number of you have submitted questions in advance, and we are going to do everything that we can to answer your questions and handle all of the time that we have to good use. And so I'd like to turn it over to Scott now, and welcome and glad that you're here.
Thank you, Skip, and thanks to the first ever Nations Indexes Ask Me Anything. I know that I'm connected to many of you on what I still call Twitter, and I'm happy that you're here. We're going to answer, as Skip said, as many of your questions as we can in the time that we have. Best way to send a question right now would be through the chat that's available. If that's not going to work for you, then send it to support@nationsindexes.com via email, and we'll answer it there. So I'm excited to do my first ever Ask Me Anything. Let's dive in because I know we have some great questions. The very first one that we got in advance is, how can I use CallDex to find good covered call opportunities? And this is a question I get a lot because people want to use our indexes to inform their trading, to become better traders. And as we like to say, they allow you to trade with data and not just a hunch or intuition. So let's review really quickly what CallDex is. Again, CallDex is the normalized price of the 30-day one standard deviation out of the money call option. That's the flagship value. We also offer a 7-day version of CallDex for those of you who want to trade shorter dated options. And if you're selling covered calls, shorter dated options are always a great alternative. So CallDex is that normalized price, and we normalize it so that it's easy to compare CallDex for one underlying versus another. For example, a lot of people compare CallDex in the S&P against CallDex in the NASDAQ 100 as a good way to figure out the best underlying for a covered call. So very simply put, we want to sell covered calls when they're expensive, and we want to avoid selling covered calls when they're cheap. And if you join us at nationsindexes.com as a subscriber, you'll have access to the average and median data for CallDex. So essentially, CallDex is just a great way to get a general sense of whether or not out-of-the-money call options are cheap or expensive. One standard deviation out of the money, and it's important to remember that we calculate that threshold using current option prices. So this is not based on stale historical data. CallDex uses right up to the second at the money option prices to determine that threshold, one standard deviation. And for those of you who think in delta terms and not in sigma or standard deviation terms, one standard deviation out of the money is a 16 delta. So you can look at the CallDex history, you can look at the CallDex chart over time, going back to 2005 when we initiated CallDex on SPY. And in that way, you'll find out whether or not CallDex is cheap or expensive. And as always, we want to sell what's expensive and we want to buy what's cheap. So that's a really simple way to figure out whether or not CallDex can help you find great covered call opportunities. Here's next question. Those options for CallDex are so far out of the money, do they even matter? And let's do it again. Let's review what CallDex is. And we get lots of questions about CallDex. We get as many questions about CallDex as we do any of our other indexes. So CallDex is the normalized price of the 3 standard deviation out of the money put expiring in 30 days. How we get the name CallDex? Well, that 3 standard deviation out of the money threshold is the generally accepted threshold, at least among academics, for what we would call a tail event. And it's called a tail event because if you think about the the normal distribution curve, that bell-shaped curve that we're all familiar with. If you think about it, then the 3 standard deviation out of the money to the downside puts uh, are the very left-hand tail of that bell-shaped curve. So that's how it gets the name tail event. And why do we focus on those puts? Because tail events have an outsized influence on long-term investment returns. They can really torpedo your returns over time. And it's not just that the market goes down because we know it comes back up. The problem is that often when people experience one of those tail events, uh, they, 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 they tend to bail at the bottom and they don't get back in until the market's recovered quite a bit. So that's why being able to measure the market's, well, I'll say perceptions of the likelihood of a tail event is important. That ability is important. So yes, those options for CallDex are very far out of the money. They have a very small delta and single-digit deltas. But when CallDex is low, buying those as a pure speculation or buying one of those put spreads, say a $5 wide put spread that's deeply out of the money, can make a lot of sense. In SPY, you can often buy those deep out of the money put spreads when CallDex is really low. You can often buy those for 5 cents. Now, the maximum return on a put spread like that you would buy would be $5. So you stand to make $4.95 profit. I would never hold one of those all the way down, but if you buy it at 5 cents and you're able to sell it at 50 cents or $1 or $2, then you've had a pretty good trade. So yes, the CallDex puts are way out of the money, but they matter for a couple of reasons. One, we can trade them as a speculation. We're not going to hold it to expiration, but we can trade it as a speculation. Number two, it gives really good insight into market perceptions of the likelihood of a tail event. One thing really interesting, in April, the market had a really tough time because of tariff turmoil. And a lot of investors, a lot of hedgers, and even traders refused to buy those deep out of the money puts because they tried that last year. They tried it in August and December of last year. They bid them up when things got really ugly. And then the market recovered and those puts sold off really hard. And so people felt burned in August and December of last year. So they hesitated to buy them this year. And when did they buy them? They bought them when they had to, not when they could. And so CallDex ramped up very quickly. That would have been a great speculation for people who were willing to speculate a little bit of money on say a 10 bagger or a 20 bagger. So yeah, they're quite a bit out of the money, but they really matter because um, they give us insight into what the market is thinking about the likelihood of an extreme event. Great question. This is one we get a lot. How is VolDex different from VIX? How is VolDex different from VIX? When people think about a volatility index, if they think about volatility, then they generally think about VIX. We realize that, we admit that, and VIX has been around for a long time. But VolDex measures a precise implied volatility for a precise section of the option skew, precisely at the money options. And part of the reason that we calculate VIX the way we do, or VolDex, I'm sorry, part of the reason we calculate VolDex the way we do is because when I was a pit trader, and I was a pit trader in the option world for a long, long, long time, when you came back into the pit, the first question you asked was, what's the straddle? Meaning, what's the at the money volatility? And then every trader fills in the rest of the skew themselves by listening to what the market's doing. But they all base it on at the money implied volatility. So that's why we calculate VolDex the way we do. VIX, on the other hand, is very different. VIX uses nearly every out of the money option in the two expirations that compose it. So even deeply out of the money options, are included in VIX, and those deeply out of the money options have outsized influence on VIX. In fact, the further it gets below the market, the more an option has impact on VIX as far as in relation to price. And also, the at-the-money options that we use in VolDex are the most liquid, most actively traded options that are offered. It is not uncommon for 25 or 30% of the options that are constituents to VIX to not trade a single contract in the course of a day. So VIX gets, well, it gets a lot of its input from option skew, which is an illogical construct that we just don't want to focus on. And so VolDex focuses on the most important options, at-the-money options. VIX uses essentially every option that's listed.
Okay, let me switch to some of the other questions that we haven't gotten to yet. We did get another couple of questions that folks have asked. So as we go, we'll move some of those into the mix here as well. But let me try to change this to update. It looks like some of the ones that I was adding in didn't come through. So let me refresh this a bit, and I apologize for the delay here, but we'll get it going. Okay.
That's right. I'm glad we're getting questions. I'm glad we're getting more questions.
Yeah. And if I had the thing a little bit more organized, that would be helpful. And I'm sorry about that, but we'll get here. Here we go. Okay. So are you going to add more equities to the list of names that you cover?
We are going to add more names, single names, the ones we cover. The first batch that we offered in our subscription service at nationsindexes.com included those single name equities that had the highest option volume, so the most option interest. Included names like Tesla and Nvidia, AMD, Microsoft, Amazon, and a few others. We've just added some other names, including JP Morgan, Eli Lilly, Walmart, and some others. And you're probably wondering, what is important about JP Morgan, Walmart, and Eli Lilly? Well, we now offer all of our measures on options for the biggest names in the S&P 500, as well as those that trade have the highest option volume. So we are going to add some more names. And we're always interested in hearing from you which names you would like to see us add. So these are the single names. And we've also expanded the range of broad assets that we cover. We've added 7 to 10 year Treasury notes. We now calculate all of our indexes on 7 to 10 year Treasury notes, as well as we've expanded the calculations on Bitcoin. We've added the emerging market index. EEM is the ETF. And so we're proud to have done that. We're pretty close to offering all of our indexes on all of the major asset classes, but we're always interested in hearing from you. What would you like to have us add?
That's great. Let me switch to one of the other ones that we haven't added here. Hopefully that just came through for you, and I'll try to get that to fill the screen a little bit. Is that readable?
It is.
Okay, great.
It is.
So for recently added underlines like EEM, are there plans to backfill the historical values, or will data only be available going forward? If not, I'd appreciate guidance how to make use of indexes without historical context.
Yeah, that's a great question. EEM, as I just said, is one of the underlines that we've just added. And if you subscribe at the everything level, you'll get access to historical closing values for all of our indexes, going back as far as we've calculated them. For SPY, that's going back to 2005. For the Q, that's going back to 2014. And for the underlines that we've just added, like EEM, like 7 to 10-year Treasury notes. Yeah, we're going to backfill the historical values. We'll go back to at least the beginning of 2022, and we'd like to go back further than that. The only thing that hamstrings us is whether or not the option market for that underlying was really mature at the time, and that's really the only gating factor. I expect all of those to be backfilled by the end of June, so within 30 days. The only underlying that we won't be able to do that with is Bitcoin. IBIT is the underlying there, and that's simply because options on IBIT haven't been trading very long, only for 2 or 3 months. But it's a great question. Yeah, we'll backfill the historical values.
Okay, we have a couple of other questions that have come in, and this one I think is a good question. He pointed out that on X, you update your various data points and also comments such as XYZ CallDex above 20. You say it's bullish. It seems you know levels of inflection, and my question is, do you use historical stats as signals, such as like that does it show the price distribution, and how do you connect one of the values of these of an index back into if it's a good time to be taking an action in or out of a position, and how would somebody use these indexes if they wanted to in that kind of a way?
Yeah, this is a great question, and we often do this in the context of RiskDex. So, particularly with SPY, you have probably seen Joe and his guys who run that account on X talk about the next 20 days return for the S&P when RiskDex is in a certain range or closes in a certain range. So we look at that. We frankly just look at the chart, and you'll see us on X post 1-year charts fairly frequently. And we're proud to say that we're on the subscription service, we're updating our charting package. So I think that's going to be much more impressive for subscribers. So we look at all those things. One of the things we also look at, and we're also going to offer this on our website, our subscription service, it's going to be free to everybody by the end of June, is our optimism index, which is like all of our indexes. There we go. That's the version from earlier today, capture from earlier today. So our optimism index, VolDex, RiskDex, all of these are great contrarian indicators because when optimism is low, because option prices are high, well, that's a be fearful when others are greedy and greedy when others are fearful sort of moment. So that's we're not using so much inflection points as comparing current values to historical values. And as I pointed out with CallDex, and the fact that when it is very low, that can be a good time to speculate by buying some of those deep out of the money puts. It's an example of trying to buy low and sell higher or sell high. Those trades don't always work out, but when they do, it's not a matter of buying one of those deep out of the money put spreads for 5 cents and selling it for 10 cents. It's we're going to buy it for 5 cents and we'll sell it at 50 cents or $1 or $2. So that's the sort of context we use, is often historical values by looking at the chart.
Okay, our next question focuses in on RiskDex, and the writer asked, can you explain RiskDex a little bit more and try to explain what it's saying?
Yeah, RiskDex is a really interesting and really simple, actually, index. Let me take a step back. PutDex is the normalized price of a 30-day 1 standard deviation on the money put. CallDex is the normalized price of a 30-day 1 standard deviation out of the money call. And it's natural to think about how those two work in relation or how they compare to each other. And RiskDex is simply that ratio. It's PutDex divided by CallDex. So it's a measure of fear, it's a measure of complacency, and it's a measure of option skew. Again, the tendency for different strike prices in the same expiration to have different implied volatilities. So when RiskDex is very high, that means out of the money puts are very expensive relative to out of the money calls. That means there's lots of fear. When RiskDex is relatively cheap, that means that out of the money puts are cheap compared to out of the money calls. And there's, you might say, lots of complacency. So again, it's a greedy when others are fearful, fearful when others are greedy sort of moment. But also, and a lot of people are that talk to us are doing this. They're using RiskDex in one market or one underlying and comparing it to RiskDex in another. And that is the sort of three-dimensional data that can really provide insight and make you a better trader. RiskDex in the S&P world is always higher than it is in the NASDAQ 100 world. And why is that? Well, it's simply because in the NASDAQ 100, people aren't interested in selling covered calls. They don't feel as much need to buy protected puts. And so RiskDex in the S&P world is more expensive than it is in the NASDAQ 100 world. That relationship is important. But also, we know that some people are trading one against the other. And I think that's the greatest sort of trade you can make. It's the sort of thing that's you're paying attention to the data, not just a gut feel or intuition. And I really like it when we hear that people are using our indexes in ways we hadn't quite thought of. But RiskDex is just cost of puts divided by the cost of calls, and as such, it's pretty easy to understand.
Okay, great. Our next question here, are you going, oh, we already did that one, I apologize. Okay. So we're interested in your service. Would there be more educational information on how to use the indicators, for example, on covered calls, iron condors, etc.?
Yeah, this is a great question. We are right now focused on two things. We're going to upgrade that charting package, and we are going to work hard to provide more educational content. So I'm spending 50% of my time right now on educational content. We've just completed our first course, which describes our indexes in further depth. And we have several other educational initiatives that are going to help everybody who is a subscriber understand more about our indexes, how to use them, what setups they can focus on, let's say that. For example, more information about how to use CallDex to find the best time to write covered calls, how to use RiskDex to find the best time to do either a collar if you own the stock or a risk reversal if you don't and potentially want to own the stock. I talked about how people might use TailDex. How to use PutDex is really interesting because either selling cash secured puts as a speculation or buying those puts as a speculation is really interesting. That's a really fun trade. So yes, we're going to focus on educational information. Again, I'm spending 50% of my time now on providing educational information. Just finished our first course. We're going to have several more courses done in the next couple of weeks.
Yeah, and I'll say that I probably have more work to do in getting these things edited together and put up on the site. So if it takes a little while, it's not Scott, it's yours truly that's keeping me from getting it.
Skip's done a good job.
I appreciate that. Let's see. We've got one more slide in here that I need to get this to update. And okay, here we go. So this thing is a little bit longer, but I'll read it out here. We've got a gentleman who recently subscribed to us, and he's been following the content on the YouTube channel, and he wants to figure out how to stay on the right side of the market, particularly in daily and intraday trading. He mostly trades NQ and ES contracts via NinjaTrader, obviously futures, and using price action as the core of his decision making. Given that markets tend to move in their own direction and no one can predict them with certainty, I'm curious how Nations Index can complement my existing analysis to improve trade alignment and decision making. I'd appreciate any insights or guidance you can provide on integrating us into his current trading strategy.
Yeah, this is a great question. This is the sort of thing I love to hear about because it's not just using our indexes to craft options trade structures, but to understand more about the internal dynamic of the market. So this is a great question, even though you're not using options. Uh, if you just look at the indexes as numbers, then again, it's a buy low, sell high sort of thing. But if you look at them in the context of recent history, say the 1 year history of the chart that you often see us post on X, then it's a great insight into what the market is thinking. Because let's remember, these are the most actively traded options in the world. And so if you look at our indexes, say CallDex and PutDex, which have not just a volatility component, but a directional component to them, then you get real insight into what people are thinking. How anxious are they? How bullish are they? How optimistic are they? And I remember being in the pit and thinking, boy, if I knew exactly what the pit was thinking and what the pit's collective position was, then I had the keys to the kingdom. And our values can help you understand that. If you know the entire pit is long, boy, you want to be short. And if the entire pit is short, you want to be long. And our indexes can help you figure that out. If CallDex is very high, then everybody is optimistic. They own calls. They want to buy more calls. They're willing to pay up for them. And that tells you that everybody is bullish. And when everybody is bullish, you certainly want to lean the other way. One thing that we have just started working on, which I think is going to offer some really interesting insight, is to use RiskDex on the S&P and the NASDAQ together with the Relative Strength Index, or RSI, on those two. I think by combining those two and for an underlying, I think we're going to get some really interesting insights. So look for us to talk about that on the site and on X in the coming weeks. We're going to combine RiskDex and Relative Strength Index in the S&P and see what that tells us about the returns over the next 21 trading days. And I think that that's really going to be interesting. Why 21 trading days? Well, 21 trading days is about equal to 30 calendar days. And our flagship indexes are all 30-day measures. So, but it's a great question. A great question. And I think that if you look at our indexes a little bit, you'll find a kind of insight that speaks to you.
Thanks, Scott. The next question we have is a gentleman who is interested in knowing what the difference is between RiskDex and SKewDex.
Yeah, this is a good question. We don't talk about SKewDex on the subscription site very much for a couple of different reasons. But SKewDex, which is available publicly, at least on SPY, it's available publicly. Punch SDEX for SKewDex into any data provider, Google Finance, Yahoo, just about anything, and you'll see the SKewDex value, current SKewDex value. SKewDex measures the implied volatility premium of the one standard deviation out of the money put over the implied volatility for the at the money put. So that's a measure directly of skew. Let's remember that there's actually no agreed definition of what skew should be or how we should measure it. Everybody agrees that 3 standard deviations out of the money, well, that's a tail event threshold. But for skew, there's no real agreed measure. I described what RiskDex is, so it's out of the money puts versus out of the money calls. In short, they're similar, and we've just decided for the subscription service to focus on RiskDex because it's a little bit more intuitive, a little bit more understandable, and we're going to calculate CallDex and PutDex on all of those underlyings anyway. So that's the difference. RiskDex, out of the money put versus out of the money call. SkewDex, out of the money put versus at the money put.
Okay, great. Our next question, and as of right now, this will kind of wrap us up, is wanting to see the user interface for a subscriber. So I don't know if we want to go through. This is going to be a little bit of a admin view of things here, so some things are going to be a little janky from the way that we do it. You'd probably only have one of these 3 buttons, for example, depending on which product that you were to have purchased. But maybe Scott, if you want to take us through some of these things, I'd be happy to highlight what you're talking about.
Sure, that'd be great. We break our measures down into buckets, in part to make them, because it's logical to do that, but also to kind of confine the number of things we're talking about. And those buckets would be equity indexes, fixed income. The third would be precious metals and crypto. And the last one is individual equities, as you can see that right there. And the user interface on the site is, we group these differently. Skip, if you can scroll all the way back up, you'll see that we have equity indexes and financial products. And you see that if you click on a tab for one of those, you'll see all of the index values. And again, this is going to be a little goofy only because we're after the close. But for example, you can see all of our indexes on SPY right there. You see the current value, the net change for the day, the percent net change for the day. And you can compare SPY to Q to IWM, which is the Russell 2000. And you see there that we also have treasury bonds, treasury notes, emerging market, and even Bitcoin. And we've just expanded we've expanded our Bitcoin offerings, so we now offer all of our indexes on Bitcoin. That market, there you go, that's interesting. The Bitcoin option market is now mature enough that we can offer all of these. And, Bitcoin ETF VolDex has really been interesting. If you subscribe to our Volatility Insights, which comes out every weekend, we've been talking in there about how Bitcoin VolDex has been finding a floor. There we go. That's where you can sign up. Bitcoin VolDex has been finding a floor, has been looking for a floor rather, and has kept falling from about 60 when those options were launched. Bounces off 40 a couple times recently, but it continues to look for a way lower. But so there you could see all of our indexes on SPY. On the tab for Q, you can see them by Q. But we also do something else really interesting. Instead of looking at them by underlying, we can show them to you by index type. So you can see all the VolDex measures.
Oops.
Here we go. You see all the VolDex measures
I've got it on
for all of the
Yeah,
there we go.
Yep.
You can see all the VolDex measures for all the underlyings, and that's a great way to compare. Let's see. I think if you scroll down a little bit more. Oh, here we go. No, that's it. You were right. I was wrong once again. So you can see, for example, all of the CallDex measures for the equity indexes. And that sort of insight is really valuable because if you know that, again, NASDAQ 100 calls are very expensive relative to S&P 500 calls, that tells you something. It says people are really optimistic about technology. Maybe right now they're really ambitious about or are optimistic about AI, and they're looking at NVIDIA and AMD and names like that. And they're not so optimistic about the broad market. And then if you add something like the Russell 2000, which is certainly not considered a technology index, then that's the way to really get insight. You know that people are optimistic about tech, not so much about the broad market, and even less so um, about the Russell 2000. And you see that right there. You see the action, the price action today. Even though the market was weak in the afternoon, people were bidding up Nasdaq 100 calls. Part of that may have been because they wanted to be along for the ride for NVIDIA earnings this afternoon. Um, so, uh, and we do that for these buckets: equity indexes, fixed income, precious metals, and crypto, and individual names, so that you can compare. And that's a little goofy because we're outside of regular market hours,
Yeah.
and this is an admin point of view. Here we go. But you can see there that
Yeah.
we allow you to compare. We allow you to see index values. When you subscribe at the everything level, you can download the full history. We allow you to see um, we allow you to see all of our measures by underlying, and we allow you to see all of our data by index type. So again, CallDex, RiskDex for all of the interesting underlyings.
Yeah, I think there's a couple of other questions that have come in on YouTube itself, so I want to get to those. We don't have them on slides, so I'll read them out. Valtrader asks, as you're a former local or market maker, why are you not incorporating option structures, uh, OI, which I assume he means open interest, with your indexes? How would you answer that?
That's an interesting question. We know that markets tend to gravitate towards strike prices that are relatively close to at the money that have a lot of open interest. But also, open interest can fluctuate wildly in the course of a day. So, we're focused on the there you go. And Skip has downloaded some of our data. You can see the sort of downloads that are available with our historical data. But open interest, we'd rather focus on price rather than open interest. And as a market maker, I was not particularly worried about open interest until we got very close to expiration, and only then you got worried about it for goofy market maker reasons. So I'm not going to say open interest isn't important, but more worried about price. And this is a great example that we're going to run right now of how to use CallDex. This goes back to an earlier question. Great example of how to use CallDex in determining whether or not it's a good time to be selling a covered call. Here you can see, and I took this earlier today, so this is just about as up to date as you can get. 30-day CallDex on S&P, and you can see just by looking that it is now in the high, we'll call it the top half of the range, if you ignore those big spikes in April. So you see here that out of the money call prices in the S&P are relatively expensive compared to their 52-week range. And now, Skip, if we can bring the one up for the QQQ, oh, here, yeah, this is even better. And in the Russell 2000 here, you can see that out of the money call prices are relatively cheap. And so this is a great way to use CallDex to figure out if it's a good time to sell a covered call. In the S&P, it probably is. in the Russell 2000, it almost certainly is not. That doesn't mean that those that will end up being right. Doesn't mean we can't be wrong, but it does mean that you're getting information and data on your side and not intuition.
Thanks, Scott. And VolTrader followed up and said the UI looks great. He'd never seen it. Those groupings and buckets make it easy to navigate. Thanks. We have a question from Jim Carroll, wondering if the educational information we're putting together will be available to non-subscribers. And he points out it might be a good way to attract subscribers. Yeah, I could take this one if you'd like. We're talking about doing a little bit of everything. So some of them will be, as you say, a great way to attract some people in the door, and will be available to the general public just for registering so that we can associate it with an individual person. We are putting them together as online courses, not just articles to read. They will be video based, and we're trying to do some other interesting things like that to make them engaging and break them into chunks. But then we'll also have some of the, I would imagine, the more advanced stuff will be aiming at subscribers as well. Scott, anything you want to add into that?
Yeah, Jim is a good friend and has been a friend of Nations Indexes in social media for a long time. We will make, yeah, as Skip said, we're going to have some of our educational material be available to everybody. So one of the second courses we're going to put together, first course is almost in the can. So it's about our indexes. Second one is going to be about option basics. And my goal is to make that available to everyone. Volatility Insights, which comes out every weekend, that is available to everybody. All you have to do is go to the website and sign up, and that will show up in your mailbox every weekend. There we are.
And it's also on the website under blog. If they come in here, they'll see past issues in there.
Good. Okay. And in that, we talk about what the market has done, what VolDex and our other measures have done. We'll talk about percentile ranges of the past 52 weeks for some of our indexes, because, again, that's a great way to have context. We talk about things that are moving the market. We also talk about our indexes on underlyings that you often don't hear people talk about. So, for example, gold and silver, or individual names. So, Jim, both. Yeah, there will be educational content that's available for everybody. And I'm proud to say that the optimism index, which has become so popular and which got a really nice mention last month or the month before from Spencer Jacob at the Wall Street Journal. We are going to put that on the homepage of the website. We're final stages of finishing the technology portion of that. That will be available to everybody all the time, in real time, because that's just a neat way to look at the market. And quickly, optimism index is essentially 2-year rolling average of VolDex, RiskDex, and CallDex. And so when options are expensive, optimism is low. So that's what we see right there. And the important thing is optimism index has not closed above 50 since January 24th. So we're going a long stretch now, 5 months, where it hasn't gotten above 50. That tells you something.
Yeah. Thanks. I think the thing that would be a good way for us to wrap up today is just to give everybody an offer. Because we can't have any kind of ask me anything without giving you guys something for coming. So I did want to say, if any of you would like to subscribe, you can use the coupon code OFF30, just all put together, OFF30, and save 30% on any of these subscriptions that you might want to try out. And I'd also like to say, we would love your feedback on how you feel about the service, suggestions that you have for how we might make it better, and things that we could do to make the service more compelling for you, or where you think it would help make things more actionable for you as a trader. That's the stuff that we're focused on every day, whether it's with the educational content, the data driven, the indexes themselves. We'd like to be very responsive to you as our subscribers, and just always send an email to support@nationsindexes.com whenever you have something that you're wondering, and we'll try to take that and turn it around and not just answer your question, but try to answer it for everybody else too, so that there's an opportunity for all of you to find out what others are asking too. That might prompt some additional questions on your own. So, Scott, is there anything else that you would like to fire away with before we wrap up on this AMA?
No, I'm glad everybody tuned in. Thank you for your questions. Thanks for your interest in the subscription service. Again, the goal is to make you a better option trader so you can make more money. And we do love to hear your feedback. That would be underlyings that we can add, features that we can add, more information that we can add. And we'd love to hear how people are using the data to become better traders, because we know that once you give a person some data and some knowledge and some insight, they can really do interesting things, often things that we didn't even think about. So, but Skip, I think you wrapped it up really well.
Great. Well, thanks everybody for coming, and we'd love your feedback. If you want to send us an email afterwards and tell us what you thought, or how we totally screwed up and should have done it completely differently, it's your call. You're traders. We know it's probably not all going to be good, because that's the way we all think. But we'd love to have you join us again next time, and thanks for joining us today.